Good afternoon, everybody. Today is September 10th. You're watching the Stock Market Brief show. Today, we are going to keep it to the point here. We are moving into a big macro report. Inflation data is coming out tomorrow about an hour before the market opens up. So we're going to see what the market's pricing in, where it stands currently going into this report, and some key levels. Now, right out of the gate, I want to look at the expected moves for tomorrow's trading session. More specifically, not the levels. If you want to screenshot them, put on your screen, go ahead and do so. I have the 1 standard deviation move and the 2 standard deviation moves here, upper and lower levels. Looking at the SPX going into tomorrow, we're looking at a risk of approximately $52. That's plus or minus. So just one single day, that's a lot of risk for a single trading session. You can see the SPY is at about $5.24. Qs is about $5.80. And then even IWM has a pretty large expected move of $3.46 going into tomorrow's trading session as we approach the inflation data drop. It's going to be important to watch to see how the market's going to interpret the data, looking at the federal funds tool over here, which can give us an idea of what the market's pricing is, what the Fed is going to do as far as rate cuts go. As it stands in this current moment, the market's leaning towards a 66% probability that we will be seeing a 25 basis point cut, a 34% probability that we'll be seeing a 50 basis point cut. And tomorrow's data will probably help us solidify what that may be, if it's going to go more towards the 50 or if it's going to go more towards this, or it's going to even out and be even more confusing. We will see. If we talk about some key levels overall, I want to bring up the 30-minute timeframes on all these index products. And this is the SPY over here. And the SPY, you'll see that we have this moving average. This is the 5-day moving average. It's declining at this current moment. And you can see that it lighted up red, right? There's times where it lights up green. But when it's red, it means that the price action is below it and it's also declining. When it's yellow, it could be above or below the price action, but it's diverging from the moving average. So in this case specifically, looking at the SPY, you can see that price is above it, but yet the 5-day moving average is still calculating to the downside. It will turn green if price action remains above it and it starts to flatten out and turn up for the calculation. That would be more of a positive sign that we could see a potential change in trend here for the SPY. The month-to-date anchored volume weighted average prices on all of these products right here, it's obviously anchored from the start of September when we started trading. And you can see there's been multiple times that we've tried to get above it. Today, the SPY closed above it and the Qs, but it closed above it going into this report that obviously we can start with a big gap up tomorrow or even a gap down because we don't know what that data is going to bring for the markets. I just wanted to call out here that it is good signs seeing these higher lows build, that we're getting at that month-to-day anchor volume weighted average price that is starting to turn yellow on our screen. That's a positive sign. You just need to be aware that there is still risk in this market as we head into these big, important data drops. So one thing that we can do is look to see how we can potentially trade this going into tomorrow's trading session. And me personally, when it comes out, it's going to come out an hour before the market opens up. I'll typically anchor a volume weighted average price to that level and watch how price doodles in and around that level. Then I typically wait for the cash market session to open on maybe 15, 20 minutes. And then from that point, I'll see if any trades can be established. And I prefer to be at above the 5-day moving average, right? If we start to head up, I'd like to see it flag out and then potentially start to head higher. If we start way down, I'll be watching these like the lower daily expected move, the lower monthly expected move. And more specifically, I'll be seeing if market net flow is bullish like it was today for the majority of the day. You can see that we did see this slip up over here, and this came on the back of some news while Fed Barr was speaking. And that right there caused some volatility in a lot of assets. For example, well, mainly the banks, but JPM, if you take a look at that today, JPM got completely clobbered from a high up here to down here. It was even lower, but we were decently off the lows. But that is a gigantic candle in a financial name, a big financial name at that. So this is some pretty wild moves, a little bit of a concern there. It's a little bit of a concern when you look at products like crude oil and how this has been falling off here. And while crude oil has been falling off, a 10-year yield has been following suit, a new low there today. Now, typically when you get a fall in the yield and a fall in the dollar, we'd notice that is actually positive for the markets, but recently it's actually been correlating more positive. If you look at the 10-day correlation of SPX and long-term yields, it's actually currently positive in this moment, meaning that they're moving for the most part hand in hand. So I think that that's important to note, as it does come up into positive correlation sometimes, but when we talked about it, it was more in a negative correlative state, as well as the longer term 30-day. And we also paired that with the dollar, and the dollar you can see is kind of trying to base out here, but the dollar fell off hard and fast, which led to a big rise in the price of gold. So if I bring up gold, you can see gold has been doing rather well from a year-to-date perspective, from an all-time perspective. It's basically consolidating up here near and around its all-time highs. And gold is that more safety type trade, right? And that's a little bit concerning, because then you look at something like copper, Dr. Copper, this has been falling off from this high over here at around 5.2. And this being coming down, knowing that it has this PhD in economics, what is the market trying to signal to us right now with yields collapsing? You have commodities such as crude oil been falling through this compression pattern over here and not even seeing a back test of any sort as it stands in this current moment. But these are large moves, and I think it's sparking a lot of fear, growth concerns, potentially recession fears, that we're seeing a subtle change here begin to take place in these overall markets. So as nice it is to see the market start to shift more positive here, we really need to let this report come, see what market does from that standpoint, and kind of attack it from there. I do have the daily expected moves on the screen over here. One of the levels on SPY that I'll be watching for to potentially trade up to on the upside would not only be the daily, weekly, and expected moves, but also this anchored volume weighted average price here. So in order to show you that a little bit more clear, I want to show you it on the daily time frame. So we're going to go ahead and pull up the SPY on the daily time frame, and what you'll see here is that anchor volume weighted average price is right at this level at about 555. And 555 seems to be somewhat of an important level, not because of just that anchor volume weighted average price, but if you look at the high from this day, it also matches with the lows of this day. And then when we broke actually through that level, it happened to be a close below that anchor volume weighted average price at the same time there too. So these two levels seem to be important, and they're kind of converging right here in this area. So on yesterday's brief, we talked about, can we see, where can it potentially go to? Where price go to? Well, we were watching this lower swing low anchor volume weighted average price. Well, it's there. Okay, cool. Now we're kind of at that month to date anchor volume weighted average price. Let's actually anchor volume so you can actually see it right now. Where is that anchor volume weighted average price? Hide. There it is. Boom, right here. Boom. Okay. So on yesterday's video, we talked about, hey, if you were to take a trade right here and have a stop below this low or this low, we talked about them both, but if you wanted to trade it up to here, that would be, your reward would be right here and your risk would be right there, which is about a 2-for-1 risk to reward, and that's a pretty good ratio right there. Now, if we said if your stop was down here, it'd be more of a 1-for-1, and that kind of skews thing a little bit, and it would be better to have the trend on your side, which looks like it's starting to shape up, but we just need to get through this report to really kind of understand that. Now, we did close at this anchor volume weighted average price while volume was drying up here on the SPY. That makes sense to me. It's okay that volume dried up here. Volume typically dries up, especially when we see price contracting within this inside day and then also leading into a big report. So we'll see probably a larger move in volume tomorrow, a large move here in the S&P 500. In fact, the expected move, like I said, is pretty large. Could bring us up to the weekly expected move and or even potentially right back to where we really started the week at as far as the lower level goes. And that's if we don't get a surprise. If we get a surprise, these levels can obviously get bigger. So like I said, those are some of the levels that I'll be paying attention to. I'll be watching how market net flow shapes up. I'll be looking for more bullish price action. I'm not really too keen on shorting the market unless if it's a lot shorter period in time or a lot smaller position. So I'm looking more for the long setup, and if it doesn't come, I'm probably just going to be sitting on my hands. Let's take a quick look at what new highs for the year came up today, and I wanted to call out some of the names that showed up on the list. Was Walmart, Oracle reported earnings, Procter & Gamble, Thermo Fisher, we have Verizon, we have Nextera. So we're seeing consumer defensive, we're seeing healthcare, seeing some utility names here. And while we're seeing this stuff take place, right, they're basically making new highs on the year. Real estate made a new high on the year. This was breaking out quite nicely. Maybe one chart to watch was EQIX. EQIX broke out of this a little consolidation, saw a big move. So see if this consolidates and then maybe press to these highs over here. Another name that we were watching and we traded was Cube. Cube made a big move. It flagged out and we kind of broke through this. but we were watching it over here as well as stuff like EXR, NEE, right? This one is also a new high on the year, and this is one that we've been watching from back here to see about trading it up higher, and now it's starting to break out further there. And then just healthcare names in general, right? We've been seeing some strength from them. We had a little bit of a reversal candle over here, and it's still holding up rather well for healthcare. So more defensive posturing. We are seeing the market structure kind of change up a little bit here. As we go into tomorrow's trading session, I'll be obviously watching gamma levels. And gamma levels as it stands right now, we are in negative gamma. And being that we're in negative gamma still, we can see selling into selling, buying into buying. This is where volatility typically increases. The flip line right now is roughly 55.30. Some of the levels that are being mapped out on the screen right now is 5,600 above us, 5,400 below us. And then there was a level on Bookmap that I wanted to just reiterate and call out that we pointed out on an episode a while ago, and then also on Twitter a while ago. But we're talking, we have 3,000 plus contracts down here at 5,250. They've went, but they've been here for the last couple of trading days too. Below that is 500 contracts at 52.25. And you just think of this as an auction place, right? If there are no buyers holding up price, outweighing the supply above, the supply is going to outweigh the demand, and it's going to eventually come in, and it's going to look for where buyers are hiding out. And if supply keeps outweighing the demand that's in the market, it's going to seek out where there's much, much more attention, where people are willing to do business at. And right here, if these levels are going to remain here, they can potentially act as magnets. And I think we need to be aware of that. And that's down there at 52.50, that's quite a ways away, right? If we pull up a chart of ES, and we pull up 52.50, 52.50 is really down back here towards and around these August lows, kind of right about here. So roughly right around that 200-day moving average. So, I mean, that's a pretty big drop. Is it going to happen? I don't know. Maybe, perhaps. I think we got to continue to monitor, watch it, see how price responds after tomorrow's data, see what price action does if it does come into and around the upper anchored volume weighted average price that's in confluence at around 555 on SPY, and then kind of go from there. That's all I got for you on today's episode, everybody. Hope it helped out. I'll see you later.